Good morning, everybody. It's Wednesday, August 4th. It's going to run through the morning charts here. We've got the Kitco overlay chart. You can see yesterday I pointed out in the morning that we had the previous day's range between the baby blue line here was most likely going to contain the price action for the day, which it did through the night. We saw that breakout, and then it's been drifting just above that this morning. And now we're drifting right up into the 1200 area. So if I pull up the intraday and daily chart of gold, you can see here's the daily chart. The trend is still down. We did see some capitulation selling right here, and volume right now it's been tapering off as this move's gone up. The difference here is this move looks to be somewhat bullish, but what happens with gold is you usually see a pop, you'll see a consolidation, and it looks like a good short, and then you get one more kind of hook up, which is what really shakes people out, and that's what we're seeing today. And of course it's still into a resistance level. I would think unless it breaks this high, it still looks like a bearish play, simply because there's big selling volume, low buying volume. It's trading up into resistance, and there's a safe place to put a stop around the 1205 area, and this could easily pull back down to the 1180. From there we'd have to reevaluate it, because it could simply form a mini reverse head and shoulders on the daily chart and continue up, simply because this looks like capitulation volume, which means it's washed out the last of the stops, and the market's been cleansed and it's new money moving in. It's similar to what we saw over here. You see, huge selling, and then it washes the market. And I feel as though where we are right now is similar to what we see right here. We see a move up, a couple day pause, a pop right into resistance, and then you'll get a pretty sharp like a $20 drop or so. And that's what I think we're heading there right now. I think we've just made that push up, and the risk reward looks pretty good. There's about a $20 potential, possibly quite a bit more, but safely I think there's a $20 potential, or $15 to $20, and the stop can be set at 1205. So I'm going to be looking at issuing an alert to short gold this morning with a stop around 1205.20, somewhere in there. Anyways, that's what I see for gold right there. As for the intraday chart, let me just pull that up. You can see here's the recent price action. This 60-minute chart. Of course, the trend is down here. Kind of had a breakout above a trend line, but this pattern here is just it's really just getting squeezed, and it's somewhat a bear flag. And just the way that it's been grinding, it's way higher without any real kind of like nice pauses or corrections. And the fact that it's kind of happened on low volume and declining volume as it gets higher into this resistance level indicates that I think we could get a snapback, and then we'll reevaluate. Definitely take some money off the table if we go short here. Take some off around 1180, 1185 if we want to be safe, and then we'll reevaluate it, because it could continue to work its way higher, but we'll just play it one bar at a time. Anyways, to compare that with some gold or US dollar price action, this is the daily chart of gold. You can see there's major support on the US dollar right down in this area, the bottom of this range. There'll be some resistance up here at the top of this range, because we had some price action bouncing around in here. Anyways, if you just visually take a look, you can see the dollar has a move about this size, and then it has a bounce, and then it has a move about the same size again and has a bounce. And now we're down about the same spot. We're down at bottom of a pretty major support area, and I got a feeling we could see a 1 to 2 penny bounce in the dollar. And of course, if the dollar goes up, it should put pressure on gold, and with gold trading at resistance right now, we could see gold quickly have the US dollar will pop, the dollar or gold will fall quickly, and it could make for a really good trade. So that's what I see right there. Now let's jump into the S&P futures. Pretty much the market looks like it's rounding out. It is starting to get a little exhausted, which I pointed out the other day. The market is overbought. It's trading into this wedge here, and it's been bouncing up nicely. And you can see we had two pretty nice we had a nice hold on support here with nice volume, and then we had a nice bounce on Monday with good volume, and then we had a low volume pause there yesterday. This morning you can't look at this volume because it doesn't update until the market's open, but we're having a light volume correction here. We're sitting above the 200-day moving average, the 5-day moving average. We're above the 14-day moving average and 50. So we've got a nice cluster of support here. Of course, we're stuck under this resistance level, which is why it's getting wedged and squished. And hopefully we're going to get a break to the upside. I'm going to be looking for a low risk entry today, and we'll have a nice tight stop in there. So that's what I'm seeing right there. As for the intraday chart of the S&P 500, you can see this trades through the night. So we had the run up on Monday, Tuesday. We've had this drift down, and just this morning the news just came out not too long ago that the private sector employment jobs rose 42,000, which is pretty good. It means businesses are growing, they're hiring, and we're seeing a bounce up right here, and it could set the tone for a pretty good day. And we'll have to see what happens once the market opens, but pretty much we're trading into a support area. I'd like to see I don't like to jump right in off here. We'll probably get some type of pullback today or a pause, and then we'll hopefully take a long position. So that's what I see going on, and I'll talk to you guys later. Bye bye.